Trump wants rate cuts, but the Federal Reserve just isn't budging, or at least not yet.
President Donald Trump said the Fed should cut rates.
We are finally putting America first.
Trump's latest round of tariffs could lead to interest rate cuts from the RBA next month and beyond.
He says, well, they'll recalibrate, and then it will happen in the coming days.
So here's what's really happening. President Trump calls for a loud and clear message that he wants the Federal Reserve to cut interest rates, and he wants them to be cut now. On April 4th, Trump posted on Truth Social saying this would be a perfect time for the Fed Chairman Jerome Powell to cut interest rates. He went to explain why. Energy prices are down, interest rates are down, inflation is down, eggs are cheaper, jobs are up, but he left out one major thing. And that one major thing is that the stock market is down. And down bad. In fact, if you look at the S&P chart, you could see that it looks like it's just completely fell off a cliff, dropping at around 20% from its highs. And I personally think that it's going a lot lower than where we're at now. I wouldn't fall for a false rally right now because there is such a deep pullback in the market that a relief rally is quite necessary at this moment. And this is a major piece of the puzzle. And Jerome Powell responded to Donald Trump saying that he's not in a hurry. In fact, on the exact same day of April 4th, Jerome Powell spoke at a conference in Virginia.
I will say though, you know, it feels like we don't need to be in a hurry. It feels like we have time to, yes, it feels like we don't. No, I mean, it's like I said, you have inflation is going to be moving up and growth is going to be slowing, but it isn't really, to me, it's not clear at this time what the appropriate path for monetary policy will be. And we're going to need to wait and see how this plays out before we can start to make those adjustments.
He said inflation might rise, growth could slow, and that there's too much uncertainty right now to make a move. So while Donald Trump is pushing for quick action, Powell is pumping the brakes. He wants to see more data before doing anything. Here's why the Fed actually ignores the political pressures. This isn't a new feud. Trump has criticized the Fed before, but Jerome Powell has made it extremely clear he won't respond to political pressures. He said the Fed follows its dual mandate, which is this: stable prices and maximum employment, which is their North Star, not social media posts. Now the question is, what if we enter in stagflation, meaning if both parts of the mandate break down at once? That's exactly what economists would call stagflation. When inflation stays high, yet the job market weakens at the same time. A reporter asked Jerome Powell this exact thing: if both inflation and employment rise, which one do you tackle first?
One of the questions from the audience that we had is, if unemployment takes off and inflation takes off, which lever do you go for? Which lever do you, what do you do?
So we actually have we have a document called our consensus statement, or the longer version is Statement on Longer Run Goals and Monetary Policy Strategy. And the 6th paragraph of that actually contemplates when the two goals are in tension. And what it says is, think about how far each variable is from its goal, and think about how long it would take for each to get back. So in a way, it's an equation. You're comparing two quantities which each have two variables. And then you say, you look at that and you think, what do we need to do? And typically this doesn't happen very often, but if one of them is further away, then you would focus on that one.
As you can see, Jerome Powell explained that they compare how far each variable is from its goal and how long it would take to actually fix. Whichever problem is worse gets priority. It's not ideal, but it's how they decide. So now let's talk about a new element. Jerome Powell is currently talking tariffs.
We have stressed that it will be very difficult to assess the likely economic effects of higher tariffs until there is greater certainty about the details, such as what will be tariffed, at what level, and for what duration, and the extent of any retaliation from our trading partners. While uncertainty remains elevated, it is now becoming clear that tariff increases will be significantly larger than expected. And the same is likely to be true of the economic effects, which will include higher inflation and slower growth. The size and duration of these effects remains uncertain. While tariffs are highly likely to generate at least a temporary rise in inflation, it's also possible that the effects could be more persistent.
As you can see, Jerome Powell warned that tariffs can make inflation worse and slow the growth even more. He also emphasized that the full impact of these tariffs are still unknown. You can see everybody online speculating on what they think that the car market's going to do, or the stock market, and many other markets across the board. As you can see, it's just complete speculation, considering Jerome Powell chairman of the Federal Reserve, still doesn't know what are the ramifications of these tariffs. We don't know how long they'll last or how global trade partners will respond to them, but we do know they haven't been responding very nicely. And this adds another element of uncertainty and less reason for the Fed to cut rates anytime soon. Now, let's take a step back and look at inflation. The Fed's goal is to bring it down to 2%. While most of the people watch CPI, the Fed prefers to look at the PCE, and even more specifically, core PCE. Looking at the chart, what's the problem? Inflation is still above the target, and it's been extremely sticky, staying in this area. That's why Jerome is actually hesitant to cut rates. Doing it too soon could reverse the progress they've made. Even though Jerome Powell says he's not ready to cut rates, the market thinks it's coming soon. The Fed meeting is on May 7th, and according to the CME Fed Watch tool, there's a 70% chance that the Federal Reserve holds steady right here. But by June 18th, markets are pricing in a 94% chance of a rate cut. That's a dramatic shift in just 6 weeks. To be fair, the Fed did project that 2 cuts would happen during March 2025. So the market may be right. The first one could come in June. By the way, June 18th isn't just another meeting. That's when the Fed will also release the new projections. It'll be the first time they incorporate the economic impact of Trump's new policies, including the tariffs. That meeting could reshape expectations for the rest of the year. Truth is, there's loads of uncertainty ahead. And here's the bottom line. Donald Trump wants rate cuts and he wants them now. Powell says not yet, but markets expect cuts to happen this summer, but the path forward is still unknown. We could be heading into stagflation, or the economy could stabilize before it gets worse. Either way, the next 60 days are extremely critical. As an investor, this is the time to stay level-headed and stick to your strategy. One of the most important things that I'm doing right now as part of my strategy is deploying a market-neutral strategy. You need to find something that has the ability to take positions in trade and even find growth in uncertain times like we're in right now. One way that I've actually achieved that is by using a trading algorithm that trades thousands of times both to the long and short sides, never holding an asset in hopes of its appreciation because that's just a gambling game. We call it hold and hope, which is something we don't ever want to do. And the strategy I've used is very well documented in this channel. But if you want to know how you could actually leverage this exact strategy, I'm having a free webinar where we go over how it works, how you could potentially leverage one of these inside of your very own portfolio to help you get an edge in these uncertain times. If you're interested, the description has a link just for you if you wanted to take this time serious and double down so you could be effective moving forward in these uncertain times. If not, and you just found value out of this, please smash the like button, and like always, my friends, peace.